Anand Shah is with us, Hd-PMS AIF Investments at ICICI Pru Asset Management. Anand, good to have you with us here. Thank you very much for your time. You know, we had Naren with us a week and a half or back, and his view was kind of clear that maybe this is the year for large caps now. I mean, the remainder of the year, at least. Is that how you look at things as well, Anand? I mean, what is your own view, near to medium term, with all that is going on? And there is a lot going on. Go on.
Hi, very good morning. Yeah, indeed. And this year is going to be more bottom-up than top-down. Obviously, it's a tug-of-war between relatively stronger fundamentals in India versus what's happening globally. You're watching, especially US, the 10-year has moved up significantly last 1 month. China is obviously crawling back from slowdown, and to that extent, there's a slow but a steady recovery out there. But otherwise, you don't have great news coming out from global markets. On the contrary, India relatively looks a little stronger. Obviously, a lot of things going for India, and to that extent, this year belongs to bottom up. And when you sort of scan the market, obviously we find a lot of value in large caps relative to the mid and small caps. So that's true. Nevertheless, when you do a more of a segmental and more of a sector-wise analysis, we will have winners within the mid-cap and small-cap. So we've been more bottom-up, and that is the way forward, at least this year.
Okay, you've been more bottom-up. Got that. Anand, hi, good morning. In terms of sectors, how are you positioned in the NBFC space? We had some pretty decent numbers that came in from Bajaj Finance, but these are stocks that are, already at 52-week highs. Do you see more valuation and growth upside here?
No, within the financial services space, we actually prefer banks over NBFCs. Given, you have to also appreciate that banks actually had a very tough time between 2015 and almost all the way up to 2020, 2021. And in that period, obviously, there was a significant de-rating in banks and re-rating in NBFCs. Also, to that extent, relatively, the competition coming in from banks within the overall market was weaker as they were grappling with NPAs and recovering and fixing their own balance sheets. I think going forward, while there would be winners within NBFCs also, but our take is that the bank is better placed, both in terms of growth, in terms of competitiveness, as well as in terms of relative valuations. I think we would at least we prefer banks over the NBFCs.
Okay, all right, Anand, just hold that thought. Jubilant Foodbox is a stock that you should be keeping on your radar because there could be an offer that's underway, but they've slashed the prices on large pizzas big time. And they've sent it to all their clients out there. So that could be a stock in focus on the large pizzas. On the veg side as well, it's down from around 799 rupees to around 499. On the non-veg pizza as well, it's down from around 919 to 549. Could be ahead of the big event. That's the ICICI World Cup. That's going to be kickstarting later this week. So that could be one of the stocks that should be on your radar. Competitive intensity, I think, is going up. And I think as a snack, I think the demand as well for pizzas has been going down. I think burgers have been coming to the fore.
Some have said, and not all agree, and I remember posing this to, I think we had someone as an analyst, price points are lower, right?
Yeah.
For burgers. So maybe it is in a high inflationary environment, down trading. I mean, of course, there is, of course, intense competition in the pizza space as well, but maybe a little bit of down trading from high price pizzas to slightly more affordable burgers. That's one explanation. But of course, this is in the realm of theory. We'll have to talk to companies to figure out why this is happening.
I'm just feeling really hungry looking at that offer. I mean, the non-veg pizzas has all the sort of salami on toppings.
Go ahead, Sonia. Right on cue.
World Cup or no World Cup, right? I mean, getting hungry here. But I mean, that's actually a good question that we can even pose to our guest about what the the way forward could be in this entire QSR space, right? Anand, how are you feeling about it? We're entering into this big event, which is the World Cup. All the QSR companies, even the platform companies for that matter, Zomato has picked up in a big way. But there is a lot of competitive intensity within segments. How are you approaching it as an investor?
No, indeed. So obviously, any segment that has a growth obviously is a good opportunity for equity investors, but it also always attracts competition. And what has changed in the QSR space, and especially within QSR in the home delivery space, is what Zomato and Swiggy would have done is it's now all pervasive in the sense you can get delivered anything and everything, and it's not only pizza that used to be a decade back. So I think to that extent, competitive intensity in general has increased, and rightly so, given globally, food is the biggest industry and it would attract that sort of entrepreneurs and the capital. So that's happening in India for sure. But even within the delivery space also, it's actually a couple of notches up in terms of competitive intensity. So it's a tough business and a very difficult one indeed to crack and continue to maintain leadership, because obviously there is always change in the taste, and to that extent the customer loyalty, if you would have observed yourself or any one of us, we don't have a great loyalty for the same food as we keep on trying new stuff. It's a tough business.
Okay, all right. Anand, since we're talking about the World Cup, a couple of sectors could be in focus. Case in point being the hotels or the aviation space as well. And some of the stocks have already seen a big run. Now, Q3 is going to be seasonally strong. And also you have the World Cup. Do you think some of these themes have already played out? Or do you think the best is yet to come for them?
I think this is something I was discussing even, that these are the certain sectors which have actually had a very, very painful long period of time, like telecom, like airline, or for that matter, even hotel. And to that extent, we have seen a significant consolidation in this industry, in the sense that the new hotels are not being built, not many new aircrafts are coming through because of the OEM issues, but even we have seen consolidation both in telecom and in aviation. To that extent, I think notwithstanding World Cup, I think, and our philosophy is one of the key ingredient when we look for in our stock picking is consolidation of industry. I think aviation, hotels, and even telecom, they all fit through in terms of increased pricing power for the manufacturers/service providers, and less of the pricing power for customers like you and me. And to that extent, we would be in years to come paying more for these services than less.
Okay. Anand, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC TV 18.